Good afternoon and welcome to our Monetary Club podcasts. My name is John Petley. I'm the Chief Researcher for the Institute of International Monetary Research. And my guest today is Daniel Lacalle, who's with us all the way from Madrid. Daniel has worked for a number of companies, including PIMCO, ABN AMRO, and is currently the Chief Economist of Tressis. He's a professor of global economics and also heads up the Spanish Mises Institute. He came over to Buckingham to speak at a conference in 2023 organised by the Institute, where he spoke on the subject of central bank digital currencies. Today we'll be discussing something a little bit different, but perhaps something that has a few features in common with CBDCs, stablecoins. Anyway, welcome, Daniel. It's good to have you with us.
Thank you very much.
And let's start off with a very simple question, really. Stablecoins, they've been in the news quite a lot. What exactly are they? How do they differ from conventional cryptocurrencies like Bitcoin? What's the big differences?
Well, thank you very much for inviting me to start with. Um, Conventional crypto assets, such as Bitcoin, are not pegged to any currency or any other type of claim on reserves. And the price is completely driven by supply and demand. Therefore, there is nothing that we can say has anything to do either with reserves or with a central bank. They're completely separate from what we perceive as the monetary world as we know it. A stable coin is something in between. It's a crypto asset whose value is completely linked to a reference asset, most commonly being the US Treasuries, but also the euro, gold, or a basket of these, no? And it uses as a collateral those reserves and certain algorithms to reduce volatility. So one could think that a conventional crypto asset is an entirely supply demand driven and independent, non-regulated asset, while a stable coin is a financial instrument and a crypto asset that is fully backed by another reference asset, usually treasuries. Stable coins are basically used as transactional digital cash for payments, trading, and settlements. And Bitcoin is more used as a token and an asset that is used for basically as a reserve of value, but not yet as a unit of measure or as a means of payment. Technically, if we look at stable coins, those are issued by an entity that manages reserves. So, for example, stable coins tend to be issued by banks or by regulated entities, and they can work on multiple blockchains. No, Bitcoin only exists on its own network and has no centralized user.
So we're talking about something that's rather in between
Yeah,
conventional crypto and say something like a CBDC. I
yeah.
mean, the big question is, do we regard it as money? We've clearly decided, certainly at the Institute, we are very firm in saying that crypto is not money, it's an asset. But with stable coins, probably still seen as an asset, but perhaps a bit closer to money as we would define it.
Yeah, I think you're absolutely right. I think that for an asset to be money, it needs to be a unit of measure, a means of payment, and a reserve of value. Crypto assets are not money, therefore, but we could say that stable coins are assets that are pegged to money, if that makes any sense.
Yeah. So this peg, I mean, how effective has the peg been? Have the stable coins actually lived up to their name and been fairly stable?
Usually, they are quite stable. Major fiat-backed stable coins, such as the US dollar treasury, trade quite close to what we would call par, no? So basically at the same level as the reserve asset, sometimes within 1% of the peg, with small deviations that are typically arbitraged away quickly in the market. However, Obviously, this we don't have enough information in terms of time of whether these small DPEGs may become common and whether they're going to be short-lived, whether there can be instances in which the stable coin loses the peg with the underlying asset in an event of change of confidence in the instrument. So we don't have enough information, or at least a history that tells us that this is going to be the case all of the time. But so far, it is actually quite stable. Obviously, when we look at some examples in the market like the Luna and other examples, these pegs without a very robust, high quality reserve base can fail very quickly because the stable concept comes only from the belief that the reserves behind it are stored somewhere that is safe and that is acceptable, no? And there can be cases in which an institution may issue a stable coin backed by gold, but there is no real underlying gold behind it. We have cases, no? Remember Venezuela's allegedly gold-backed crypto asset, no? Obviously, it wasn't backed by any gold. So one of the things that we can say is that stable coins can only be stable and really pegged if there is institutional confidence in the backing and if there is a strong level of independence in the way in which that backing is fundamented relative to the asset.
So there's certainly an element of trust among stablecoin users that
Yeah.
they're not going to see the volatility that some cryptocurrencies have seen, even quite recently. So
Yeah.
how popular are they? I mean, what sort of people use stable coins? What they use them for?
Most people use them for arbitrage. For example, a lot of people may say that a 1% deviation from the peg is small, but a 1% deviation from the peg for a day with enough liquidity can be a very attractive bet, no?
Mhm.
Crypto traders, arbitrage, users who are looking to lend, borrow, or that need liquidity pools, cross-border users and remitters that want cheap, fast transfers without, for example, if you make a transfer in fiat currency, it may cost you in some countries $30, $40 a transfer. This is immediate and this is very cheap, and it's obviously something that is dollar linked in most cases and therefore acceptable in most international providers. We have seen a recent case of, for example, the Iran government trying to avoid the sanctions and gather more reserves, more US dollars, using stable coins to do it. From obviously a positive and not rogue regime perspective, most stable coins are used as a sort of layer for traders to get enough liquidity, and it's used mostly on exchanges as the dollar proxy for any trading on derivatives, margins, and collaterals.
So it's a very good way of doing cross-border transactions.
It's probably the cheapest one, certainly. And if you think about large transactions that require a delay because of regulatory requirements, because of legal requirements, etc., it's much more effective, and certainly in terms of commissions, no competition.
You mentioned Iran a minute or so ago, obviously very much in the news and very much seen as somewhat of a rogue state at the moment. Is this an indication that stablecoins, rather like crypto, could be used for, let's say, transactions of a rather dubious nature? Is there much evidence that they're being used, for instance, for money launderers and other criminal transactions?
Like almost any asset, I would say any fiat currency, because if you think about cash, it's also and not only cash, no, there is always going to be an element in which somebody that wants to conduct illegal activities is going to use one of these measures or one of these elements that, in one way or another. But the examples of money laundering, sanction evasion is a different thing because ultimately, if you think about it, the reason why the US administration prefers stable coins is that it doesn't avoid sanctions. It's basically a way of bring of in a sort of strange way, it brings a lot of the allegedly non-legal activities into the eyes of the Treasury. Huh? But obviously, there's going to be instances in which it is used for money laundering, for fraud payouts, because they have dollar-like stability with blockchain portability. But ultimately, it's much more difficult with a stable coin than with, let's say, Bitcoin or Ethereum.
Right. That's interesting to know because obviously the next question I was going to ask you is turning to the more legal side of stable coins. I mean, it looks from what you're saying that it's almost like a second and better attempt to recreate the original thinking of some of those people who devised the original crypto, where they're basically trying to look for a system whereby the central bank is taken out of the equation and all the fluctuations that you can get in interest rates. In other words, a sort of payment system that was independent of any outside party, such as a central bank or the government. Obviously,
Hmm.
crypto has changed a lot and is, as we've agreed, is really just a commodity now. But could it be that stablecoin could achieve what the original inventors of crypto tried to do, say, 15, 20 years ago?
I'm not entirely sure because if you think about it, the original inventors of crypto were basically looking for an asset that was unforfaitable, that was completely independent from central banks, and that had absolutely nothing to do with state currency, fiat currency. No, stable coins are not that. Hmm? Stable coins are, I would say, a hybrid link between fiat money, the way that we know it, and the original crypto idea. So, on the one hand, you get, I would say, more independence, more freedom, if you want to call it, from central bank and regulated and dependent institutions. But coming back to the previous question, it is a fully traceable type of currency or asset that will ultimately be in some form dependent on central bank money supply. And that is therefore sort of a hybrid. No, if we look at what many of the crypto bros, as they call them, no, say they say that stable coins are a fantasy because they are not stable because fiat money is not is just going to disappear because of inflation. No, um, most stable coins are centrally used and centrally issued, which is obviously not what the original crypto idea was looking for. They're fully regulated and backed by bank deposits and treasuries, which ties them more with the existing financial system rather than those trying to escape from it. So one could also say that a stable coin is trying to recreate the dollar in the new blockchain world. I think that that is what a stable coin is. So it gives, on the one hand, the type of reassurance of the dollar if in a world that continues to be fully, mostly dollar denominated, no? Users transact independently of individual banks and borders, but the monetary anchor and much of the risk sits completely within the fiat system that backs them internationally.
So it's quite different, or at least what it's developed into something quite different from the original ideas that the inventors of crypto had.
Yeah, I would
Now,
say so.
now you mentioned the dollar quite a lot, and obviously most of the stable coins are actually pegged to the US dollar, even though, as you've mentioned, one or two others are actually pegged to different currencies. But it's very much the link to the dollar which is causing some concern in certain quarters, including the ECB's Jürgen Schaaf, who's expressed
Hmm.
concern that with this link to the US dollar, what could end up happening is a lot of people are going to be buying stable coins, and eventually they're going to be finding themselves tied into US treasuries, and it's essentially becoming a vehicle for the Trump administration, which is issuing treasuries like there's no tomorrow to get their financing in a new and slightly unconventional way. What do you say to that?
Obviously, stable coins pegged to the US dollar are probably not by design, but certainly a very, very good tool to re-dollarize the world. And a stable coin is something that for the people that are looking for modern and technologically advanced ways of using money and using financial assets is much better than a central bank digital currency. Why? Because a stable coin gives you enough independence and enough level of security about the fact that the central bank is not going to monitor or dictate your decisions. So privacy is stronger within stable coins than with the risk of a central bank digital currency. So it's no wonder that some members of the European Central Bank are concerned about stable coins. Because if you think about it, what what differentiates the position of the European Central Bank versus the Trump administration is that the Trump administration perceives the risk of central bank digital currencies as surveillance disguised as money and as a method of monetary tyranny. And I quote, therefore, the risk of privacy in stable coins is very, very low. There is traceability, but there is no risk of privacy. Citizens are not going to be monitored in terms of what they purchase, what they save, what they owe, and what they do. And it does not require a digital identity that is controlled by the central bank. So I understand the concerns of the European Central Bank. I think that considering what you just said, which is the amount of debt that the United States needs to issue in 2026 and 2027, stablecoins are a phenomenal tool to provide another layer of demand for US treasuries that is not within what we look at as investors on a daily basis. No, and we look at central bank, pension funds, the different global central banks that use it as a reserve, the different banks that use it as a reserve. This is another layer of US Treasury demand. I think it's smarter than a central bank digital currency because in today's world in which there is so much lack of trust in government institutions and so-called independent institutions like central banks, it's a way of, at least from an administration perspective, say to citizens, we're fine. We're not going to monitor your transactions. We're going to just give you a reserve asset that pegs that other asset and therefore gives a certain level of stability.
Yes, I think there's been a lot of criticism of central bank digital currencies simply over this privacy issue.
Absolutely. The problem with central bank digital currencies is in the architecture, is that we have lived a period like 2020 to 2024 in which the independence of central banks has been put so many times under question. Um, if you build an asset with an architecture in which privacy and control of payments, the fact that it's fungible and is also something and programmable are things that obviously cause a significant level of concern. So either you eliminate those things, which is what I would suggest to the European Central Bank from the architecture, or the US is going to kill the market in a positive way with stable coins.
So that really leads me on to the last question. Where do you see stable coins going in the future? I mean, at the moment, say something like crypto, you have your crypto enthusiasts, they buy and sell. It's quite a big part of some people's lives, but lots of people say Joe Public. I mean, even myself, I mean, I take an interest in all this because it's part of my job, but I haven't got any crypto. I've not got the slightest desire to have any. Are stablecoins going to become a bigger and bigger thing in the future, or do you think they're going to become rather a sort of niche interest or niche activity, rather like crypto has seemed to be
Hmm.
becoming?
I think that if we look at the figures today, stable coins are already rivaling, actually exceeding most conventional cryptocurrencies, both in transactional volumes and in terms of the of liquidity. So within the crypto world, stable coins are already, let's say, winning in terms of market share once we take Bitcoin out of the picture. Um, it is very it is very difficult right now to envision a moment in which the average citizen that basically uses money for savings, deposits, and lending, very, very little things, is going to be a major consumer of stable coins. But for example, I have three kids that have studied abroad, but my family has been scattered all over the world in various occasions. And I have had to pay fees and rent and food in different currencies at different moments with ginormous commissions. No, I am currently, for example, using stable coins for that, for that purpose. No, so it is plausible that in terms of fiat payments globally, stable coins become bigger than volatile tokens like Bitcoin, and which I think that they are going to be separate and parallel. No, that stable coins are likely to be the blockchain alternative to fiat money, while Bitcoin, Ethereum, and other crypto assets belong to an alternative universe that you can find either, I don't know, in Decentraland and things like this, that have their own market share, which by definition can only be smaller because obviously the liquidity of stable coins does not fall or is not limited, obviously because of the constant issuing of currency from the side of the United States, no? But that's not the case with Bitcoin, certainly, and with Ethereum and others. So as a challenge to fiat currencies, their impact is basically just more like a second derivative, not something that is going to eliminate the use of the US dollar. Most stable coins are going to continue being basically what we could call wrappers around existing fiat currencies, no? And they tend to reinforce rather than eliminate the underlying currency's appeal internationally as a means of payment and also as a reserve of value.
So it looks like they're going to be here to stay, but very much as a complement
Yeah,
to conventional fiat currencies.
absolutely. I think that ultimately, when central banks are thinking and governments are thinking, what is the future of money? I think they all understand that it's not going to be within the limits of what we are experiencing today. There needs to be a way in which governments and currency issuers adapt themselves to a world that is evolving at an absolutely frenetic pace. And I think that obviously you cannot do within the SWIFT, within the fiat system as we know it. But when we look at what is the future for that, it's not looking for an alternative, but it's looking for a vehicle. Basically, I would call stable coins like placing an old horse within the much faster realms of a high-speed vehicle. No, so you have a horse, which is the old money, on top of I don't know, a truck that runs much, much, much faster.
Well, thank you very much, Daniel. I think probably for many of our listeners, they're still probably not that aware of stablecoins and how they work. So I believe that what we've discussed over the last 20, 25 minutes will be very helpful. It's been good to talk, and thank you once again for being willing to take part in this conversation.
Thank you very much. It's been an absolute pleasure.